might not know, but there's a full-blown war going on. This time it is war on cash. So far, there have been 3 monetary shocks this century alone. Each one of them more devastating than the other to everyone who have been holding money. In this video, I'm going to go over what I see as the 4th monetary shock. We're going to look at what this means for your money and how bad it can get, how fast it's happening, and of course, what we should be doing in order not only to protect your wealth, preserve your wealth, but also what we have to do in order to increase your wealth. But before we start, I want to welcome you to Crypto Never Sleeps. In case you're new to this channel, well then please hit like, smash, subscribe so that you can be notified every time we upload new videos. My name is Nico Arachi and I'm the host of this little show. Okay, so today we're going to be talking about the 4th great monetary shock that I believe is very much on its way. Like I said, 3 monetary shocks in the last century, and the 4th one is happening right now. You see, the future of finance is being built right in front of our eyes, and it's being built on the blockchain. Now, before we start, I want to ask you a question. Do these dates actually ring a bell to you? 1907, 1933, and 1971. Now, to most investors or people, these dates probably don't mean very much. But if you've been studying anything related to the monetary system and the history of money, it's likely that you know what those dates mean. You see, these are the dates that we had previous monetary shocks. These monetary shocks are not to be confused with stock market crashes. You see, these events, they are different. In reality, they are real resets, or maybe even complete game changers to the entire global monetary system. And as I just said, I'm not talking just about the United States or Europe, but for the entire international monetary system. The financial world is currently so interconnected and relies heavily on the strength of the US dollar. Today we're going to talk about how each one of these panics, each of these shocks had major impacts to both savers and investors. And as big as all 3 of those dates were, I believe we are sitting on the edge of a 4th. And I believe that the 4th one is going to be bigger than all of them. In fact, I think this is the final shock. And I think it's going to destroy, wipe out all financial privacy and put all people's savings and dollars at risk. And it doesn't matter which currency you hold them in, except perhaps if you hold them in cryptocurrency. Now again, if you're one of the educated investors, you know what all of these dates mean, and you probably also know what impact it had. So it won't be a surprise to you. But for the most of you, it will be a completely caught off guard event. And let me tell you, even if you are experienced and you know what I'm talking about, I want to ask you, have you made the needed adjustments? Have you actually positioned yourself to be safe rather than sorry? Or better yet, have you set yourself up profit from these changes that are bound to happen? First, I think we should recap what the first 3 shocks were. So let's jump back in time together, and the first trip takes us all the way back to the panic of 1907. Now, the bank panic of 1907 was a short-lived banking and financial crisis in the US that occurred in the beginning of the 20th century. It resulted from the collapse of highly leveraged speculative investments, which were propagated by easy money policies pursued by the US Treasury in the preceding years. This led to bank runs on New York banks and trust companies that had been financing these risky investments, and to shrinking stock market liquidity as smaller regional banks in turn drew down their deposits from the New York banks. You see, at the time, we did not have a central bank to fall back on. So the leading financiers, the financiers, most notably JP Morgan, they stepped in, they put in their own money on the line to bail out the surviving Wall Street banks and obviously all other financial institutions. Now, this event became the impetus for the establishment of the Aldrich Commission and the infamous meeting at Jekyll Island, Georgia, where the foundation for the Federal Reserve System would be laid. So let's look at the key takeaways. The panic was caused by a buildup of excessive speculative investment driven by a loose monetary policy. Sounds a lot like today, doesn't it? Now let's look at the key takeaways from 1907. The panic was caused by a buildup of excessive speculative investment driven by loose monetary policy. That sounds to me a lot like today, doesn't it? Second, without a government central bank to fall back on, US financial markets were bailed out from the crisis by personal funds, guarantees by top investors and financiers, which include JP Morgan and John D. Rockefeller. Well, that also sounds a lot like today, except that today we are seeing the banks being bailed out by the Federal Reserve, but ultimately by the people, by you and me. Or maybe not me because I don't live in the US, but by all US citizens. The third key takeaway is the panic of 1907 was in fact the driving force to impose more governmental oversight and public responsibility to bail out financial markets, leading to the creation of the Federal Reserve System just a few years later. Now that also sounds a lot like what we're seeing today. You see, what I think we're going to see is we're going to see a crash of the current financial system, only to discover that there will be imposed more governmental oversight and public responsibility in order to bail out financial markets and create just a new one. As the Federal Reserve was created, it was given three main purposes: to serve as a lender of last resort, to serve as a fiscal agent for the US government, and to act as a clearinghouse. The last key takeaway is that the panic of 1907 exposed several of the problems of the National Banking Act of 1864. Chief among them was that the act didn't cover all banks. You see, what I think what we're going to see in the future is that they're going to say the same, that the Federal Reserve Act did not cover all the current problems. So we need strictly to see more governmental influence. The second major shock happened on April the 5th, 1933, when President Franklin D. Roosevelt signed an Executive Order 6102. Order 6102 was the order that made it illegal for Americans to own gold. The government confiscated the gold, and as soon as the government had gotten all the gold back, which was obviously money at the time, right? Gold was money because it was backed by gold, or the dollar was backed by gold. So once the government had gotten all the gold back, they then devalued the dollar by 40%. So just imagine, every individual that had held gold or was holding the dollar, as the dollar got devalued by 40%, ultimately meant that your dollar was worth 40% less than it was the day before. What President Nixon did was that he basically paved the way for the current monetary system that we have today. 1971 was by far the most destructive of all the shocks that we have seen. And really since 1971, it has caused all kinds of problems. We've seen real wages go down. We have seen the richer getting richer and the poor getting poorer. And we are seeing huge budget deficits as never before. But let's go in and look how Investopedia describe it. And here are the key takeaways. The Nixon shock was an economic policy that was undertaken in order to prioritize the United States economic growth in terms of jobs and exchange rate stability. Second, the Nixon shock effectively led to the end of the Bretton Woods Agreement and the convertibility of US dollars into gold. Third, it was the catalyst for the stagflation of the 1970s as the US dollar devalued. Fourth, thanks in large part to the Nixon shock, central banks now have a greater degree of control over their own money, making it easy to manage variables such as interest rates, overall money supply, and velocity. Last key takeaway. Many decades after the Nixon shock, economists are still debating the merits of this massive policy shift and its eventual ramifications. Well, I can tell you, you just keep on debating. I think no one can argue or debate that that had any good implications for the overall economy. But hey, who am I? What do I know? Now let's get back to today. Enough of time travel. And this brings us to what I am going to talk about today, and that's the fourth monetary shock. You see, the fourth monetary shock is happening, and it's happening right in front of our eyes. And I believe that the ultimate consequences are going to be the end of physical currency. The way that I see it is the digital dollar is coming. Even though I don't think that most people are ready for what is going to be the new reality. Now, try to go down memory lane. Just one more time to go down in time. If you look prior to 1907, how many banks, financial institutions there were? You look at how many of them disappeared up to 1930s. If you again go and look from 1930s to 1970s, how many more banks disappeared? And now, since 2008, not only did we lose more, not JP Morgan, Lehman Brothers and Morgan Stanley, or which was the other big bank. It always only goes in one direction, and that direction is very clear. We are seeing less competition within the financial banking industry, and we see more power given to governmental institutions. It always only goes one direction. Less banks, more power to the government. And the drastic changes that we have seen in the previous three shocks that I mentioned is nothing compared to what is shaping up right now in front of our eyes. It's going to be devastating. It's going to be completely devastating to yours for your savings and for your money. And the thing that you need to know is that that can happen out of nowhere, immediately. It will happen without any real warning, just like it did with the gold standard. You see, you don't really think that they're going to announce it ahead of time, right? And gonna say, hey, listen everyone, get ready, because we're about to take away half of your wealth. No, they won't say that. It's gonna happen quickly. So that's why it's so important to try to analyze and read the signs, read between the lines, pay attention to the things that are in progress. And what is it that is in progress? I will get to that right in a second. But you see, a lot of people, they won't realize that cash has powerful enemies. You see, a lot of people, let's say, want to get rid of cash. Governments, particularly, they hate it. And reason being is they can't track it, they can't trace it. They can't trace if you and I would do a transaction. Let's say we do a deal, I buy you TV, and I give you some physical cash. They don't know about it, and they want to stay in control. So when I say we got to pay attention to what's actually in progress already, very simple. Look at the mother of all central banks, Bank for International Settlement, Mr. August. I like him. Look at the managing director of the IMF, sweet sister Kristalina. Just listen to this briefly.
I used to say the future is digital until I realized the future has arrived. And Jay, you helped me realize that very much in the summer.
How could anyone think that Sister Kristalina doesn't just mean it good with us, right? The digital age is already here. So when we see these organizations, right, influential, powerful, already having set up research centers, already there are more than 72 international central banks that are already going to roll out their digital currency. Now, if you still don't believe me, then listen to this. The world is drowning in cash, and it's making us poorer and less safe. In The Curse of Cash, Kenneth S. Rogoff, one of the world's leading economists, offers a plan for phasing out most paper money while leaving small denomination bills and coins in circulation indefinitely. Now, in Rogoff's world, governments are going to run the monetary system. They will run it directly. So there's no more messing around with stealthy cash, no payment options that can keep your transactions private, that can keep you out of the view of the government. All that has to be banned. And I'm sorry to be the one that's going to break it to you, but in many ways, this war on cash is already over. I understand that everyone that already understands a bit about cryptocurrency, they believe it's going to be the rebirth of a decentralized financial system. But listen to me. That's a myth. What we're going to see is a centralized financial system. Upon that, to a certain degree, a decentralized financial system will be built. There's never going to be a decentralized, permissionless, censorship-resistant financial system. At least not with the current governments in power. And B, that we're going to elect new governments that think this is a lovely, lovely idea. But at the moment, it's a contrast. And this is not, I'm not a fan of conspiracy theories or anything like that. Listen to me, every government in the Western world and powerful world has been elected democratically. And I'm sure that the governments have done everything they could in their power to give the mandate and elect and choose rightful organizations and people that would run the monetary system of each country. Now that they have failed, yes, they have. Does that make them overlords or elites? No. It makes them human beings that made a mistake. And it's now up to the country, to the people, to democratically re-elect new leaders that hopefully can implement a better and more sound financial system. And in case you made it this far, allow me to introduce to you the future of finance. It's being built right in front of our eyes, and it's being built on the blockchain. Please let me invite you to watch tomorrow's video about the power of the central bank digital currency. My name is Nico Arachi, and I am no one.